Hello and welcome to the Business Report on The Wire. It's been in the stock market for 36 years now, has over 1 million retail broking customers and executes over 2 lakh transactions almost daily. So the news one evening on Karvy took some people by surprise. On November 22nd, SEBI passed an interim order against Karvy Stockbroking, prohibiting it from taking new clients in respect of its stockbroking activities. The exchanges moved next. BSE and NSE suspended the broking membership of Karvy. There will be more coming from SEBI to follow up on its interim order. But let's take a few steps back. There were rumblings in the weeks running up to the ban. Clients were complaining of delayed payouts. Usually a customer should get the money in his or her account by latest the third day of the transaction. But clients alleged that they didn't receive the money after more than a week of executing the trades. The broking firm initially said the delay in payouts was on account of technical issues. But soon, the full import of what had happened started leaking out. According to SEBI, Karvy had credited funds generated by pledging client securities into its own account. Simply put, it is alleged that Karvy illegally transferred stocks and securities from a client's demat account into its own demat account. Karvy then took loans with these shares as security and used that money for other businesses of its own. An amount of over 1,000 crores was transferred from the broking outfit to its group entity Karvy Realty between April 2016 and October 2019. Two immediate problems arise from this sordid episode. Number one, collateral damage. Karvy raised funds from Bajaj Finance, ICICI Bank, HDFC Bank and IndusInd Bank to name a few by pledging securities worth more than 2,300 crores of 95,000 of its clients. At this point, SEBI estimates the total exposure of lenders to Karvy at close to 3,000 crores. HDFC Bank has an exposure of 300 crores. ICICI Bank's exposure stands at around 460 crores, for IndusInd Bank at 100 crores. Bajaj Finance has an exposure of 345 crores. In fact, as per the lenders, Karvy Stockbroking had even given an undertaking that the securities that were being pledged were its own and not that of the clients. But here's the catch. In a move to safeguard investors, the National Securities Depository or the NSDL decided to transfer securities from Karvy Broking's demat accounts to client accounts. Almost instantly, this has jeopardized the interests of the lenders who gave loans to Karvy with the same shares as collateral. While the depository's move is to safeguard investors, it has jeopardized the interests of the lenders who gave loans to Karvy with the same shares as collateral. The number of such clients is over 80,000. The ultimate decision will have important ramifications for a loan against share market principle. Lenders are now taking a relook at all such pledges or loans against shares. Again, this could mean another round of defaults and tightening in the banking and shadow banking universe, which is the last thing the system needs. Problem number two. What now for Karvy clients, and is this a problem that's snowballing into something bigger for other brokerages too? Joining me to add perspective to that is Prakarsh Gagdani, who's CEO at 5 Paisa Capital Limited. Prakash, thank you very much for speaking with us. I want to first take 2 or 3 steps back, because I think what's happening right now, especially for the retail audience, is that there is some panic in the system. I want you to simplify and explain to someone watching what exactly happened from a client's point of view with the Karvy episode.
Yeah, so see what happens, how typically a broking transaction for a retail customer works is that you open 2 accounts with a broker. One is a trading account, one is a demat account. Trading account is with your exchanges to trade, and demat account is basically a repository of your shares. What happened, and for smooth movement of shares from your depository to broker to exchange and vice versa, there's a concept of power of attorney, POA. Otherwise, it was a physical slip that every time you sell a stock, you have to sign a slip, give it to your broker, who in turn gives it to exchange. So, to eliminate that paper process, power of attorney was introduced, where you give the POA to a broker saying that whenever I sell or for any risk management purposes, this is a power of attorney, you can use it to transfer the shares from my account to the broker and to the exchange. Now, in this case, what has happened is that Karvy in particular has used or rather misused the power of attorney of customers and have transferred the shares from their account to Karvy's personal accounts, and thereby then they have used it to sell in the market or pledge it with financial institutions. So this is what has happened. So it's like I am having shares in my demat account and suddenly those shares get get wiped out and I don't know where exactly it has gone. So on the front everything looks to be okay, but at the back the shares are gone. So that's a bit scary for a retail investor because he trusts, when you give a power of attorney, you definitely trust your broker that it will only be used in on a proper legitimate way. So yes, the situation a bit scary. People are suspicious, especially in times where you are having news after news of an NBFC falling or a bank falling, and then you have a broker. So there is a bit of lack of confidence among people this entire episode.
As you explained to me very simply earlier, I have gold or jewelry and I gave it to you and you went and gave it to somebody else who gave you cash against it. So now it's a vicious cycle.
It's a vicious
So two-part question, Prakash. What if my money is still stuck or my shares are still stuck rather, and if I have got my shares back, am I liable in any way?
So first question is, if my shares are stuck, I think what I read in the newspapers is most of the customers have got their shares back because that's what SEBI did, that whoever is the real owner of the stock has to be given back. There are some customers where the shares are stuck, but it's again a tricky situation because the shares were lent to a financial institution, and so financial institutions may also claim their stock, which comes under a purview of a different regulator. Here there is a different regulator. So it will be some time where your shares will, for a retail investor, he will get back. But I think the way our normal regulation is, the right is normally given to a retail investor. So today or tomorrow, I am hopeful that they will get it back. On the second side of it, if as a retail investor I have got back my shares, then I am absolutely not liable at all because those were my shares. I had paid for that to purchase it, and I have all the right in the world to move that stock from one depository and transfer it to any other depository of my comfort and choice. So there is absolutely no liability on a retail investor. Unless he is not paid. For example, there are a lot of people who do margin trade funding. So I have not paid, but the shares are there. In that case, obviously, the right is with the broker.
I did read some, some quick analysis the moment this news started breaking, Prakash, which talked about, first of all, verify that your shares are in a demat account, which I think would be the case, and then which depository it was with. Now, does that make a difference between the NSDL or the others?
No, actually it doesn't make any difference. So every broker has a preference to go with a particular depository. Most of the brokers have association with both the depository, which is CDSL and NSDL, and depending on client comfort or any other reason, they deal with both. So it doesn't matter whether it is a CDSL or an NSDL.
So if I have fully paid up shares in either of the depositories, it does not matter. I should be able to get that transfer back through a physical transfer slip. How would I go about the process?
Right now, if
since Karvy's operations have been halted,
So both the depositories have their online platform. I won't know the exact name, but everyone has their online platform where you can log in, create your own login, go and see the shares that you have, and from there online you can transfer it. So you don't have to give any physical slip in that case. Whatever broker you have opened a demat account with, apart from Karvy, you can just go and transfer your shares there online.
Let me ask you this as well, not specific to Karvy, but for any brokerage, because they also happen to be registrars for mutual fund holdings. Is that impacted at all in any way, or are my mutual fund holdings safe and insulated from this entire episode, no matter who the brokerage might be?
It is, so theoretically, yes, it is absolutely safe because the custody of the mutual fund units.
Theoretically is a tricky term. It always means there's trouble to follow.
I use the word with a pinch of salt because I don't know exactly what is going to happen tomorrow. But yeah, that's the reason I'm using the word theoretically, because basically in mutual fund when I invest, the money goes to AMCs, which is again with the banks, and in turn they lend to institution. So if there is any problem at the institutional marginal borrower from AMC, that's a different case altogether. But if I am investing into a mutual fund, the investments are going into debt and equity, so that is absolutely safe. The units are also digital. Secondly, this entire mutual fund investments have no correlation with the broking part of it, because in case of mutual fund, brokers are only facilitating transactions. The stocks and everything are still with the custodians. So I think that's pretty safe, and I don't think so there is any reason to worry there.
You raised this basic tenet or principle in terms of the broker and retail client relationship, which is the POA. And I think that's the question a lot of people are asking now. Should I be giving that power of attorney to my broker? Is it safe? Is it as kosher as it was being made out to be?
See, in practical terms, power of attorney was a very useful tool for a customer as well as for a broker, because every time you sell a stock, you can't, especially in digital area where you have customers spread across country, and most of the brokers do not have branches in every city. So it becomes very difficult for a customer that I have sold, then I have to actually sign some physical slip, send it to my broker. The settlement time is only 2 days. So practically it was not practical approach to sign a physical DIS slip. So power of attorney was a important tool. Now we know that it has been misused. So because it is misused and you have power of attorney, it means that you are actually giving the entire power of your stock and holding to some third party. So technically it sounds very scary, but practically it was a very smooth process. Though from a regulator perspective, it is not compulsory. What we in turn did when we started off, and we thought that taking a power of attorney physical signature is also a problem. Then we have customers in small towns where the word power of attorney, because most of the people have heard this word in films, and it means that someone will take away my property and all that. So people are very scary. So what we started off with, that we don't have power of attorney concept. So 80% of the customers do not give us power of attorney. We have built an online system where you go online, you say that I want to transfer stock to you, broker, I'm going to sell, or I'm just transferring because I want to take a margin benefit. So I think that is an alternate way that brokers should adopt. It will also give a comfort to a customer that if the stocks are transferred to my DP account, that is my property. No one can take advantage of that. So I think that's an alternate approach people should now take.
There is another fear that now the exchanges, or at least the authorities, are going to really crunch down hard on the brokerages, right? It could mean higher compliance costs or some other things. What's your sense? I know nobody knows how this will work out, but what's your sense of how this is going to pan out? Higher compliance costs or some other, more stringent measures?
See, this was already there since last 1.5 years. What we see actions today are a result of the audits, the checks, and the processual change regulators have brought over last 1.5 years. So there are hosts of compliance that a broker has to do on a daily basis. Some are weekly processes, some are monthly processes. So compliance cost has anyways gone up, and in a way it is good. And there's a side of a coin on the both sides. How it is good? Because then you will have serious players. You can't have a broker with just few crores of capital and set up a shop and start attracting money, because then it puts a systematic risk on the capital market. So today, after all these, you will have serious players, people who are invested heavily into technology, compliance people. So at least it will separate men with boys. On the negative side, you become so regulated that there are very less opportunities for you to experiment with business. But I think over a period of time, everyone has realized that it is in the interest of everyone that the entire capital market is very well regulated, because we cannot have a systemic risk on the entire financial ecosystem just because there are some broker who wants to experiment with something. So regulation is good. Processes have been built in last 1.5 years, and what we see today are a result of those checks and balances. So going ahead, I'm sure there will be more, and every month there are some or the other circular coming from exchanges or SEBI in terms of changes in the way we report to a broker. There are also a lot of communication which now depositories and exchanges are directly doing with customers. So it is not completely with broker only. So I think overall it is more compliance, but it is more compliant as well.
You know, along with the POA, Prakash, it's interesting you raise that because that's the other thing that there's chatter about. Maybe I'm not safe with a standalone brokerage or an individual broker. I should ally with a brokerage that is allied with a bank. That seems to be, you know, one line of thought. You know, how would you address that concern?
See, I'll completely buy your point, because we are the moment there is some problem, we say that whom do I trust? So trust is a very important factor, and in India, the trust goes with PSU banks, because everyone knows that a PSU bank cannot fail because there is a government backing. So there is a natural inclination towards a bank and a broker allied with a bank. But then what happens is that it's a temporary phase. After some time, people value that what my individual broker is giving me in terms of cost, benefit, research, ease of use. If I get that with an individual broker, people will come. And it is only a matter of time somehow, because for example, with this entire episode, we are communicating more with our customers. So we have not seen any drop in terms of revenues. Yes, people asked us questions, we replied to them, and then it is business as usual. But for few, it would matter that I should move my broking to a bank based broker. But then there is also a lot of advantage with doing your broking with a standalone broker, because technology, cost and everything will be far lesser at an individual broker rather than a bank based broker.
I guess some of the fear also comes from the fact, Prakash, that there have been reports in terms of raids across the country for brokerages, etc. Now, are these two related, or is there some kind of hygiene check being run which is separate from the Karvy incident?
So, as I said that there are a lot of audits that exchanges and SEBI have carried out in last 1.5 year. There have been joint audits with representatives from SEBI, depository, exchanges all coming together and conducting an audit at your place. So what we see today again is a result of that. So maybe raids with respect to some proprietary trading or something of that sort. So that is happening as a result of that, as a result of all these audits. But how much of that is going to impact on the brokers, only time can tell. Are there more actions which are going to come in coming months? So that's a grey area, keeping fingers crossed that there is not more of a shock.
The NSE also came out with a long list of safeguards, Prakash, but I think the problem in communication is often that a retail client does not approach the market with the level of finesse that the market regulators do or the market participants do. I want you to simplify that for someone watching and just give them a top 5 or a top 3 tips to keep in mind while approaching the market, and what kind of checks they should be running on their own.
See, for a retail investor, it is very important that the check cannot be just one time before I choose a broker. It has to be before choosing a broker and even after selecting a broker. So let me answer in two parts. What do you do, before selecting a broker? There are a couple of things which are there in public, a domain, and a retail investor who wishes to open account can go and check. One is complaints. So exchange, NSE, BSE both, they put out on their website every month the customer complaints against every broker. It can be a very silly small complaint to a large complaint. Where your broker is, the broker that you intend to open account with, where that broker is in that complaint list. Is it on the top in terms of percentage of the total customers that he has? If it is low, it means that people trading there are satisfied. That's the reason they are not complaining. Second, credibility of the broker in terms of how big the broking company is, how spread they are, what is the backing, are they experienced and all that. Third is, is there any order which is passed against broker in history? So SEBI puts out that on the site, exchanges puts out that there was a fine or maybe there was an action taken. So that is a red flag. And fourth is that you go online and see what the world is talking about that particular broker. Today we live in a world where everyone has an access to social media and people are very active. So even if there is a very small problem, people will go and write. So what people are in general talking about the broker. If the overall talk is positive, then you can take a comfort. If overall talk is negative, then it is better to choose someone else. So these are few steps that a person can take before choosing a broker. After choosing a broker, there are, as NSE put out some list of to-dos. I can add a few more. For example, if I trade, every time I trade, I need to get an SMS from exchanges. I should be getting from my broker definitely, but I also should get it from exchanges. Whether these two amounts tally, whether am I getting a contract note from my broker in the evening. Third, every month the exchanges sends out the fund balance and the security balance with a broker. Is that amount tallying with what I see in my broking? I need to also add the stocks which I am having in the depository, whether these amounts are tallying. Fourth, if I am asking for a payout, how fast my broker is giving me a payout. In today's world, it should happen in few hours, maximum a day, considering if it is a weekend. So that should be a threshold. If it is taking like 2 days, 3 days, then there is a problem, unless I have a cooperative bank account which does not have NEFT and all that. But that's very rare. Fifth, when I sell a share, if I'm selling a share, whether my shares are getting sold properly, whether I'm getting corporate actions, if there is a dividend, there is a bonus, there is a buyback, all that I should be getting that. I should be getting an alert. So all these are day-to-day regulatory compliance activities that everyone has to do. If I am a customer and I'm getting all these, it means everything is good. So that's how people should check before and after opening an account as well.
Fantastic, Prakash. Thank you for explaining all that, and I hope what's already very brittle sentiment is sort of held together, and this is contained and doesn't have any ripple effects. But thank you for joining in with your thoughts today.
Thanks very much, Mitali, for having me on your show. Thanks.
To receive instant updates on all videos from The Wire, click the subscribe button and hit the bell icon. Pay to support independent journalism. Click the link in the description and choose the amount you want to pay.